That financial intermediaries are a key component of really building and developing private markets in any country. I truly believe that the private sector is what is going to propel this whole continent, sub-Saharan Africa, into a completely new era. I think there is a paradigm shift in the way that we're operating in this country, and quite frankly, being here in Nigeria, being from the International Finance Corporation, looking after the financial sector investments that we have here, Nigeria for me has set a banner and a benchmark in terms of how we should look at regulating this industry, one, and secondly, how we can use the banking sector to now start intermediating truly with industry, SMEs, microfinance, etc., in terms of developing the economy and the industry.
What sort of examples can we draw from one another in propelling these ideas forward?
I think one of the biggest lessons we should learn is making sure that the capital base of banks in any economy is stable. Now, that does not necessarily mean magnitudes of increase in capital bases, but there has to be a reasonable minimum capital level for the banking sector, which would, one, allow them to be cushioned against crisis, and two, enable them to do good business on their balance sheet by leveraging their capital. At most, we recommend a leverage of about 10. So 10 times capital in the term of borrowing. Beyond that, you start to get into serious problems. So that's one big lesson that I think we've learned. I think another lesson that we have learned and we should start to encourage is into trade between regions. So in East and Southern Africa, for example, or East Africa, you have now Kenya, Tanzania, Rwanda, Ethiopia. These countries are beginning to become much more integrated and much more interrelated in terms of the business that they do. So stimulating trade, shoring up the capital of banks, and ensuring that banks start to intermediate. Right now, banks have very much been corporate lenders, but they should start to intermediate at the lower levels of the economy in order to stimulate the whole economy.
Let's talk a little bit about Malaysia. They had their own sort of financial crisis. What can Nigeria learn from this? And do you see us being as successful as Malaysia in the near future?
First of all, banking crisis for me is a matter of when in any country, especially in any growing country. It is not a matter of if. We are in a business that is a risky business. It is in the business of taking risk. So inevitably there comes a time when most economies will go through a banking crisis. The most important thing is, do you have a regulator that is very much on top of things and is supervising actively, not just on paper? And then do you have bankers who own banks, not just the managers of banks, but the shareholders of banks who are committed, personally committed, to making sure that the system stays sustainable? So what we experienced in 2009 in Nigeria, there is no one who can say it may not happen in another 5 to 10 years. The important thing is to make sure that the capital is deep enough to absorb those losses. The regulator is on top of things. The bankers themselves are self-regulating to some extent. And also the role of the board is extremely important. Most times when there's been crisis, the board has been found to have not been doing their duty fully. So yes, it's possible.